Hey traders, welcome to the first video of October. It's the first trading day of the month and of the quarter, so wishing you all a very successful trading month. We're going to take a look at the majors in the Forex market. We'll have a quick look at a couple of the commodities, and then that'll be it for today. Now, basically, we have quite a bit of news this week, predominantly focused around the US dollar. We have the NAFTA deal, which is the North American Fair Trade. Which has seen the Canadian dollar strengthen over 235 pips just since Friday against the US dollar. And then also we've got non-farm payroll on Friday. We're looking at the dollar index here. This is just a little bit of analysis that I sent out to my traders this morning. What have we seen? Well, obviously, if we're looking at the dollar index, we're seeing that the base market, the dollar, has been rising progressively. Then what we've seen is we've seen this bearish correction. It's come back into a level of support around 94. If you understand your trading patterns, this is a falling wedge. We've broken out of the falling wedge. And now what we're looking for is, rather than doing the retail trader thing, which is buying on impulse and momentum, we're waiting for another correction before we can get long the dollar. So right now, smart money will either be already bank something, or they'll be banking pretty soon and maybe leaving just a little bit to roll, and the next bit of smart money will be coming in on any dips. So how can we look at that? Well, if we drop down to a smaller time frame, we look at the 4-hourly chart, we know that the dollar index has a supply zone in and around 95 to 95.60, at which point we'd probably expect to see a decline. Here we're looking at a potential double top. This won't be confirmed until we break the neckline. What we're looking for here is a retracement back into structure, back into demand, which will be around 94.50, or potentially the retest of the descending trend line of the falling wedge, and then we'll look for that momentum buy back to the upside. Multiple ways we can look at buying this will either be price action, or it'll be break over CTL, or break and retest of short-term, near-term structure. Multiple ways we can look at doing that. Obviously, that's stuff that we cover in our day-to-day trading with the Traders Club, or in our masterclass course. So how does this information transfer across into the FX world? Well, if we look at the euro dollar, I've basically cleared my charts here so you can see what's happening. This is the reverse option of what we just seen on the US index, which we're looking at this. So here's your rising wedge. The market's now broken through. We've seen a clear break. So rather than just selling the euro right now, we'll be looking for some sort of correction, whether that's back into this sort of structure point through here, or we'll be looking at smaller time frames where any sort of correction or any type of break of structure will then look to trade accordingly. So for those that see this range that's been formed in here, we'll look for a break, potential retest of this. If the market rallies back to the upside, we'll look for shorts from here. So there's multiple ways we can look at trading this on the hourly chart. If you wanted to go up a little bit of a higher time frame, 4-hourly, you can still see that structure point. You can see these wicks, very long wicks in here, where the market has come down and then buyers have come back in. The market's come down, buyers have come back in. Markets come down, buyers have come back in. So we'd want to see a close below this wick over here. That would give us more confirmation that the market is going to continue heading down, with the next stop in and around 115.31, which again is confirmed by these wicks down here. We break through that structure zone, we're heading all the way down to 113.15. So plenty of opportunity here to short the euro. And if we look at it on a seasonal bias perspective, we know that throughout the month of October is a bullish month for the US dollar, and pretty much bearish across the board for the respective currencies that traded against the dollar. One that we are seeing a slight difference in is the Canadian dollar. This market has catapulted to strength on the back of a potential deal. It's dropped from 130.82 right down to current price of 128. So that's 285 points it's dropped from its highs just on Friday. So that's a substantial drop there. And you know, if that deal gets confirmed tomorrow, I expect to see some more further drops in the US dollar Canadian dollar. Now there'd be better markets to trade it against rather than trading it against the US dollar, which is strong. I'd be looking at some of the other weaker markets, which would be the euro, the Swiss franc, pounds holding strong right now, or even the yen. So look at euro CAD, CAD yen, and CAD Swiss as trading options. So if you did want to trade dollar CAD, well then it's quite simple. Use the structure points, potential closing of the gap. You're looking to see this market catapult back up there. If it doesn't retrace in that manner, then look at smaller time frames for corrections before it breaks to the downside. One more interesting pair this week is the yen. What we're seeing here on the 4-hour chart, you've got these very nice corrections pulling in, but the yen has a major structure play in at around 114 to 114.50. You see this zone here. If I just draw this in now, what we have with the yen, for those of you that might know anything about commitment of traders, is we've got a huge increase in the buy market for long contracts in the yen. So if that is the case, this is a potential area for a reversal trade. If we break through here, this will be a failed cut signal, and we'll probably run up to 118.50 before we get that reversal. So right now this is a real pivotal area for the yen. Now again, if we're going to see strength in the yen, then look to trade it against something that is going to be potentially weak, a euro, Swissy for example. There'll be the two better markets to trade it against. Okay, I think that's it there. Let's take a look at silver. So silver is a market we've been long since 14. This was based on not just seasonal bias, but predominantly from a commitment of traders trade. What we see is the commercials for the first time in history go net long. We broke through a nice little bit of structure here at 14.50. We had that impulse move on Friday. Now it's come back down to test. So there's an opportunity for an add-in here. So the way you can look at this will be trade break of the CTL. Could trade the 4-hour price action, but what we're seeing is a nice demand zone here. So we've broken through, we've created a demand zone. We can see that clearly pointed out by buyers coming in, and then it was acting as resistance, so now acting as support, and we're looking for this market to break to the upside and continue moving in the desired direction. Okay, so one more chart which we'll take a look at, which is high on our watch list. We've already got 3 positions running, which is Euro Kiwi. So essentially you probably wonder why we're trading Euro Kiwi and have been, and why we've got 3 positions. Well, essentially for a similar reason to why we were trading silver long. We saw a unique position from the commercials with the commitment of traders. We took our advantage from this price action here. So this was trade number 2. Trade 1 was, once it broke, we had a limit order resting at 177.18, which is pretty much here. It tested, we had our stops above structure, market came down, triggered us in, started to move. Then we saw a nice price action signal here. We took the price action signal, we moved our original stops back down to here, and then today we've traded this one here, which is the nice price action coming off where we've got support multiple times. We broke through, we've retested, and now we're in. We're looking at this current 4-hour candle. If we break and stay below the CTL and this support, we'll then be looking for further trades on this market from 175, probably tomorrow now. I don't really want to trade this long candle myself. Stops will be too big, so I'll be looking for a correction on a smaller time frame. But this is a beautiful way of trading when you're looking for biases that are working with you. You're looking for basically signals that is against the market, but yet you can only see when you trade with commitment of traders a bias. Now, if you'd like to know a little bit more about the commitment of traders, you can go to our website, which is www.tradeandtrain.com, and click on the COT report. There is a small video there for you. It's about 5 minutes long. It'll give you a little bit of introduction into what it's all about and how to use it. We also have a subscription on there, so by all means, if that's something that you'd like to take advantage of, where I send out trade ideas and potential signals for the weeks and months ahead, then obviously that's something that you should potentially look into. If you have enjoyed today's information, please hit like, share and subscribe. That's the only way of letting us know if you found it useful. If you'd like us to comment or feature any charts that you're potentially looking at, then please comment below and we'll look to analyze those charts for you. The Traders Club, we will be offering a special discount 1 day a month. That day will not be disclosed. You have to keep your emails open, subscribe to our newsletter, and we'll give you a 24-hour notice as and when there's going to be a special discount each month, and it'll be a 1 day a month. And if you subscribe, obviously you get that rate for the entire time you are subscribed to the Traders Club. So guys, have a great trading week, stay disciplined, and we look forward to seeing you on the next video.